Hello, friends, and welcome to your monthly market report for October of 2022. My name is Corinne Hayden-Goddard, and I'm going to walk you through three of the most important topics in the housing market. I'm going to be going over will mortgage rates keep rising, what's happening with home prices, and what we're calling the shining star of the housing market, which is your equity. So we're going to be going over those three things today, and I have to say this is probably one of the most important monthly market reports that you could watch in a long time. There's a lot going on in the housing market, and it's a very pivotal time for both buyers and sellers. There's a need for expert advice more than ever, and that's because there's an economic uncertainty around us. And quite frankly, it is causing a lot of people to push pause on their plans, and they need an expert more than ever to be able to navigate this market. Demographic trends support elevated purchase demand in the years to come. So it's a question of when, not if, for the housing market. People move because there's a reason that they must. And in that case, it's great to know what the market is doing, but will not stop the move. Divorce, babies, jobs, combining families, they all happen in our lives. And during those times, it is good to have a problem solver in your corner, like me. A trusted advisor will help you accurately set expectations for your purchase or sale, and that expert is more important than ever because you are in a position in which you must make housing decisions. Having a market advisor or an educator can truly transform your lives and is more important than ever. That advisor should help you bring clarity. So relevant market opinion based upon facts is more important than ever for experts, guide buyers and sellers, helping you to step through this process and be a part of this process and to make the best possible decision for yourself and your family. You need a realtor's advice more than ever, and this monthly market report will be your answer to those questions. We are seeing headlines like the U.S. housing market stares down an even bigger economic shock and mortgage rates near 7%. Mortgage rates reach highest level since 2008, and 30-year mortgage fixed rates jumps over 7%. These are all headlines that are out in the media right now, and interest rates fluctuate, and you still might have a reason to move. And so the market does not really change the fact that we all need somewhere to live and that our lives are ever changing due to circumstances beyond our control. I'm here to help you. Those who want to buy or sell make sense of the numbers and the headlines to best serve the position that you are in. People right now have the fear, the uncertainty, and it might cause you to pause your plans. But being able to break it all down and explain what's happening, why mortgage rates are rising, what's expected from me as an expert, and of course, how I can help you, my buyers and sellers, is my critical mission right now. So let's jump into that exactly. What we see here now is that Freddie Mac 30-year fixed rate from January of the beginning of the year all the way through today. And it says that mortgage rates rise for the 6th consecutive week. And those are orange bars that you can see over to the right side of your screen. You can see how rates have been rising since the beginning of the year. And look at the sharp incline we've seen over the past 6 weeks. Mortgage rates are rising very rapidly. And now what you're seeing here is a look back. So this is saying that the rates are an average of 6.7%. And that was released at the end of September. So that is a look back. And so what we also know is that with mortgage rates rise like this, you may be seeing a number that's even higher than that, and it's very much a reality. But what we can see over time, regardless of it this week or next week, is the trend of an upward direction. And that is what's happening right now. So what I want you to look at is what Sam Kettner from Freddie Mac is saying about mortgage rates today. He says the uncertainty and volatility in financial markets is heavily impacting mortgage rates. Our survey indicates that the range of weekly rate quotes for the 30-year fixed rate mortgage has more than doubled over the last year. So that's a significant increase there, climbing quickly. And the big question that a lot of people have is, why are rates going up so rapidly? Well, let's take a look at what's happening. This is a quote from Odetta Kushi from First American. And it says, the aim of Fed tightening is to curtail demand in an effort to tame inflation. And what it comes down to is that the housing market and the Fed's actions are working. And so what they're trying to do is bring inflation down. They're trying to slow the economy. And as inflation is high, mortgage rates tend to be high as well. And as you know, I've said for a long time that the inflation is the enemy of long-term interest rates, and that's exactly where we are today. So the Federal Reserve is making moves towards lower inflation, and what they're trying to do is, until inflation is down significantly, we're going to see mortgage rates rise. And now what does that do? That has an impact on the housing market, which is very intentional by the Federal Reserve right now. So although it is still a seller's market in our area and there is a need for bigger boat, we need more houses, but builders have cut back production in response to rapidly declining affordability. Annual house price growth has slowed from peak of 21% in March to 16.7% in July. So we're seeing the cooling off of the market as a result of rising mortgage rates. That is the reality that buyers and sellers are seeing right now. And this has been a trend even more rapidly over the past few weeks. So you know what everyone also wants to know is, what are experts saying will happen to mortgage rates going forward? So let me break that down for you as well. Even 2 months ago, rates 7% may have seemed unthinkable at the current pace. We can expect rates to surpass that level in the next 3 months. But we aren't really even talking about 7% anymore. So you know, as we're starting to see that tick upward, this is all due to inflation. So I think this quote is really powerful. It's from Realtor.com as well. It says, there's no doubt that the increasing mortgage rate will make home buying even more challenging. We're feeling that affordability pinch right now that is loud and clear, but buyers may still find opportunities as these changes coincide with the time of year when buyers historically found the best market conditions to obtain bargaining power. So what does that mean? Well, with mortgage rates rising, it slowed down the pace of sales, although in Michigan, not much yet. At the same time, that has created more inventory or more options in the housing market. So buyers who may have been outbid more times than they could count and have been searching for that home that they couldn't find before may be out there right now, that house that you are looking for. And so the frenzy of those multiple offer scenarios is still happening here a little bit, but it's taking more time, and perhaps a house has 3 offers instead of 5 currently. And that's an opportunity for buyers and something that I need to talk about with my friends so that you know that now there is a challenge on the flip side, and that's affordability challenge. As mortgage rates rise, it becomes more expensive to secure a home loan. So it's really important. I have trusted lenders who can help you find the right mortgage, the right loan product, the right mortgage rate, all of these different things that an expert can help guide you through. The last couple of years during COVID, we saw real estate market that we've never seen before. The meaning of home changed, interest rates dropped, and so many people said, now is the time we're going to buy a home because we need something different. Or you know, the needs of our family have changed dramatically. So what happened? Showings on the left there, that's the demand side. It went through the roof. You know, where we saw pictures of lines, people lined up around homes, and you know, bidding wars and all of that was a tremendous amount of demand that was out in the markets. And what happens to the listings? Listings dropped. Right, we've seen sort of a record low amount of homes on the market at any one time, causing, you know, bidding wars and price escalations, all of those things. The showings were through the roof, and listings were lower than we've been in a long time, and quite some time. And what happened? We literally have seen the inverse of that, which this graphic represents. Showings are down nationally right now. It's just over 12% in active listings, up over 27%. That has not been the story of the last couple of years. That's an inflection point in my business. This is a really great way to show what is exactly happening. It's hard to understand the story that's critical to this conversation around prices. The next piece of this around prices is the question of what experts are saying. I've got 4 quotes here that will go over what I think some of the real estate market right now. I'll start here with Ivy Zelman, someone that we cover on the monthly market report. She says, Zelman projects U.S. house prices will fall 4% in 2023 and then another 5% decline in 2024. So Ivy Zelman, you know, sort of this icon in the business saying home prices are going to fall next year and the following year. A couple things I'll say about that. First, Ivy Zelman projected home price depreciation this year, and we didn't see it. We haven't talked to Ivy, so I don't know why she's calling for depreciation this year. But here's what I do know. When someone like Ivy comes out and says home prices are going to depreciate 4% next year, they get all the media attention. Now I'm going to stack her projections up with all the other experts that we follow, and we're going to look at that in comparison. But no doubt, news like that dominates the real estate cycle. But there are people like Ivy saying, hey, home prices are going to depreciate. Let's hold that right there because I'll come back to that in just a minute. George Ratiu from Realtor.com says, not surprisingly, deals are not going to get done at the sale of new and existing home declining for over a half of a year, given that demand is cooling due to high borrowing costs. Keep talking about that. George Ratiu from Realtor.com, he says, not surprisingly, deals are not getting done with the sale of new and existing homes declining for over a year and a half. Given that demand is cooling due to high borrowing costs and rising interest rates, incomes falling behind inflation, and still limited supply pipeline, it's becoming increasingly clear that prices have to decline to restore market liquidity and balance. Okay, so George saying, hey, no doubt deals are slowing down. I think, you know, anybody that's selling their home, anybody who's buying a home needs to understand the dynamics there and what's important to them. And he says it's become clear that prices have to decline. So let's continue the story. Another person saying, hey, you know, decline in home prices. Third, Mark Fleming from First American. While the market's considered overvalued, you may need to adjust to the not so new reality of higher mortgage rates. Housing market fundamentals still support a moderation of annual house price appreciation rather than a sharp decline. We just talked about Zelman and then Realtor.com George. They're talking about the appreciation. We have Mark Fleming from First American saying moderation and price appreciation. So we're starting to see, you know, experts say a number of different things. Some saying depreciation, some saying that, you know, marginal dip or appreciation, sort of anemic growth, very, very little. And we'll talk about that when we compare all of the projections here in just a minute. Last one here, John Paulson, hedge fund manager. We're not at risk of collapse today in the financial system like before. It's true housing may be a little bit frothy, so housing prices may come down or they may be plateaued, but not to the extent it happened before. It's what he's referring to, not to the extent of what happened in 2008. So we sort of have this range of opinions from experts about what the market's going to do and why is that important? Well, there's a couple of reasons why. First, experts are saying, hey, this is at 28. Some are saying this is a frothy market where prices in some markets are likely to decline. And then you have some that say, know what? I think I see prices moderating. So if we start to take this picture, and this is really what I want to communicate to you today, is that what the picture is right now of those that are casting for prices, right? What our team has done is what we always do. We take a collection of what all of the experts are saying, and we put them together and say, okay, what does that show us? Here's a look at the 2023 home price forecast. When you look at Fannie and Freddie and MBA and the home price expectation survey and NAR and Zelman, we can talk about calling for depreciation. Well, I want to go back to what I said before. Who gets the press when they come out with something like that? It's somebody like Ivy Zelman, you know, Fannie or Freddie that are calling for the 4% appreciation. It's the person that's going for the depreciation that gets that. If you look at average of all these forecasters, including the depreciation forecast, 1.8% is going to appreciate. So if you ask me right now, what's the forecast going into 2023 for home prices growth? Best case scenario is probably around a 2% price appreciation or in home prices. And so I think looking at that and saying, you know, people that I'm working with, people that are thinking about, you know, what's going on and what's going to happen to home prices. So what I want to remind you is that this is what's happening nationally with home prices. And it's critically important to look at our local area and to see how home prices across the country are happening and what's going on in Michigan. Now, in Michigan, we need to remember that we have job stability. We have cars are still selling right now. And I think that things here are much different than in some of the bigger cities. Now, I want to sort of shift into that for a couple minutes here and talk about what studies have come out relative to home prices in major metropolitan areas. And then I want to break down the home price expectation survey, which I think does a really, really good job of sort of or taking this average of what all economists or a great group of economists are saying relative to home prices. So first the Zillow here, appreciation, depreciation going into the next year. For the next year, a number of MSAs and metropolitan service areas. You think about that as a city or region spending on the area and their level of price change. And what they've come out with is that they've said that they believe that 618 MSAs in this country we're going to see appreciation and 257 depreciation. But most of that 257 in depreciation is less than 1%. So 1 to 3%, very marginal depreciation, some in 3 to 5 or higher than 5%. Here's the reason that it's so important. There are forecasters out there talking about depreciation. Everybody's calling for depreciation, and that's not the case. Not everyone is, and not every area of the country. And that is the message that I need to get to you today. Okay, so that's Zillow right now. And then the second one is the Home Price Expectation Survey. What we do see here is that we are more forecasting appreciation than depreciation. So what the Home Price Expectation Survey is every quarter they survey top economists, top experts in housing across the country and say, where do you believe that the market is going? So if you look at the analysts and the economists and all of those that are part of the survey, you see more forecasting appreciation than depreciation. But we want to look at those moments, okay? And just like we just saw in the Zillow one, we're seeing that come through. Here's the Zillow one. Okay, we're getting kind of a similar trend here. All right, not everyone's calling for it, but we do have people calling for the Home Price Expectation Survey, and they even go into further out the next year. They go into 2024, 2025, 2026, and I'll give you the first look at that right now, and you can see here still depreciation being called for in small slivers in 24, 25, and 26, but appreciation more every year, meaning more and more people being optimistic about the market and appreciation. But at the end of the day, even in this scenario, in 2024, 86% of the experts that were surveyed in the Home Price Expectation Survey are calling for appreciation, 86, 91, 96, meaning the overwhelming majority of these economists and these experts are calling for home price appreciation. Now, I think the important thing to remember here is that we're driving supply and demand here. There are dynamics that we've talked about extensively on the monthly market report, and the dynamics of supply in this country and new builds coming to market. The reality is that we're underbuilt in residential real estate, and the reality of demand, which is driven by the millennial generation right now, reaching and moving through their peak home buying years, and largest generation behind baby boomers that are creating a tremendous amount of demands for homes across the country. There's the story that, that they say, oh my gosh, I react with the headlines and I see something, but I don't really read the report. And then there's, I don't go in or I dove deep into it and I really understand it. That's why the monthly market report exists, to give you the facts about what's out there. But there are a lot of people right now reacting to headlines and thinking, gosh, I don't know what's ahead, which you can look at and see with our market reports. So, okay, clearly this is what's starting to happen. This is where I'm going to call it the blindly optimistic person, or the one that has blind positivity, or you have the person that's like, let's just look ahead and not worry about it. I don't think that that's a wise way to go about it either. And then there's maybe the third way of what is my relevant market opinion based upon the facts. And I will talk about that a lot on the monthly market report each month. Creating a relevant market opinion based upon facts. You can take all of this information I just talked about with home prices, and you can make informed decisions about your moving situation. So I hope that this helps you understand home prices right now, what experts are saying, and what's next on the horizon. I think as I'm talking about the rising mortgage rate environment and the question people have around prices, people ask the question, should I buy a home right now? And I need to remind clients how home ownership wins over time. Home ownership is truly a long game, especially as we compare it to renting, and equity is a primary driver of that. So I want to start this section with the quote from First American, and it says, U.S. households own $41 trillion in owner-occupied real estate, just over $12 trillion in debt, and the remaining $29 trillion in equity. The national LTV, or loan to value, in quarter 2, 2022 was 29.5%, the lowest since 1983. So homeowners have an average of $320,000 in inflation adjust or equity in their homes in quarter 2, 2020 to an all-time high. So an all-time high of equity in our homes. That is a major financial cushion for those who are homeowners. So let's use this next quote to break down why I think it's important. And I think it says three big things. This is from Selma Happ at CoreLogic, where many households' home equity is the only source of wealth creation. As a result, recent record gains in equity and record declines in loan to value ratios will provide many owners with a financial buffer in case economic conditions worsen. In addition, record equity continues to provide fuel for housing demand, particularly households are relocating to more affordable areas. So several big things coming up here. First of all, home equity is a huge source of wealth creation. You know, the net worth of a homeowner is 40 times greater than that of a renter. So when you start to compare home ownership to renting, it is a huge differentiator for people long-term wealth gain. Also, recent record gains in equity are a financial buffer in case economic conditions worsen. You know, we are not set up for a wave of foreclosures by any means, but what we also know is that for anyone who might be in a challenging situation, they have equity in their homes. And that financial buffer can help them sell their home versus having to go through a foreclosure process or be in a really challenging situation where economic conditions worsen. In addition, the third thing I know is that equity is a fuel for housing demand. It's what people in the market, in the housing market, keep that demand high. We were talking earlier about the economic uncertainty, dust settles. Equity is a driver that can help people fuel a move, relocate, whatever it is they need to do, and whether their needs have changed, their personal situation has changed, or whatever may be. Equity is huge in that. And what we can see is in the latest release from CoreLogic is that the national average home equity gain across the country is over $60,000 just over the past year. Now, this is quarter two of 2022 compared to quarter one or quarter two of 2021. So we know that it's a look back. And I hear you when you say a lot has changed in the housing market since this data was released. But overall, $60,000 overall is a significant gain. And it's something that's creating this cushion for homeowners over time. And, you know, if we break down this report even further, we can see, you can see 60,000, the average equity gain for U.S. homeowners. That's a gain of 27.8% in just that year. Year over year totaling, that's 3.6 trillion in equity that Americans are sitting on right now. That's huge. Even to double down on the overall gains, that quote in the bottom right hand corner says the total average equity per borrower has now reached almost 300,000, the highest in the data series, very similar to what we saw before. Every institution looks at equity a little bit differently and how they calculate those metrics. And we always put the source links in the slides so you can go back and look at those methodologies. As we start to talk about what's happened over the past 30 years, well, this is the percent change in home prices as quarter two of 2022, going all the way back to 1991. So a 30-year look, the national average home prices have increased by 290%. That's massive. That is when you say, home ownership is the long game. Home ownership wins over time in a 30-year period. Given all the ups and downs, and that has happened along the way, home prices are up 290%, in some places significantly higher than that as well. So if this is a significant source of wealth and growth for a homeowner, and the question becomes, if this happened over the past 30 years, do you think it's going to be any different over the next 30 years? If you or someone is questioning, should I buy a home? This is a very, very powerful image to help you make a confident decision. History certainly doesn't always repeat itself, but we can learn quite a bit from it. And over a 30-year period of time, home values have increased significantly. And the alternative to this. We've said it before, it's rent. And look at how rent has skyrocketed over the same period of time, roughly 30 years. Here you can see how much monthly rents have increased, and that is exponential. So when someone's asking, should I buy a home? You can either put all of that money over time into rent and not get that return or investment in home ownership, or that return on that investment. And that is huge. And while we know that everyone purchased a home at different times for different reasons, but we also know that there are certain affordability challenges out there right now. But the real crisis right now is renting. As we look at the exponential, this increases over time. We really want to communicate that Much power out there is in home ownership. And truthfully, it is not just a financial benefit of home ownership because home ownership truly changes lives. There are so many non financial benefits of home ownership. And these are just a handful of them. But it's so important to be reminded that home ownership means security and stability that comes with this investment. In home ownership, the privacy, the personalized home improvements, truly making it your own is huge for someone who really wants to invest back in themselves, in their community. Your civic participation is a big benefit of home ownership. As you stay in your community over time, the value that you can add and the value that you can gain from just being a part of a community, there's a proven health benefit to home ownership. And even the financial education that comes along with that. As you start to learn how to manage that debt over time and you start to pass financial education and financial wealth down for generations, it's really a game changer. So, as we look at everything that's happening in the housing market right now, we look at rising mortgage rates, we look at home prices. It's really important to wrap it all up in a bow with the long term benefits of home ownership because we can surely prove out that home ownership has a value over time. It's financial, it's non financial, it's truly changing lives. So, with that, I'd like to wrap up our monthly market report. Thank you so much for joining us, and we look forward to having you back here again next month.